Correction over? This is Tom Asprey with the Viper Report Market Wrap video for the week ending January 17, 2025. Just a few weeks ago we put out a video, correction, because it seemed at that point that the correction camp was getting a little too crowded, even though the advanced decline lines had turned negative in the first part of December. We got one surprising drop to the downside just a week ago last Friday, but that must have cleared the air as stocks staged an impressive rebound in the past week. The latest sentiment from the American Association of Individual Investors shows that the bullish sentiment dropped to 25.4 last week, down from 34.7. That's a pretty good 1 week move, and of course was in the high 40s at the start of December. If we look what changed in the Viper Report market summary table, you can see that a big change in the advanced decline lines. Pretty much all were negative last week, and the dailies were mostly negative also. That began to change early in the week. Now only the Russell 2000 advanced decline line is negative basis my work. You can see all are above their first quarter pivots and above their 20-day EMAs and above their 20-week EMAs. And these numbers, had gotten negative, typical of a correction. That's one of the things I teach about, is how to spot a correction and how to try to judge when it's over. Let's look at some charts. For the week, you can see the Dow was up 3.7%, NASDAQ 100 of the Qs 2.9, S&P 2.9, transports a little better than those two, up 3.2. Even the utilities had a strong move. Gold shares were up a bit, and the Russell 2000 had a nice 4% gain as it was deeply oversold after the recent break of support. This is one of the changes that makes me conclude that the correction is over. This is a chart of the NYSE Composite. That's a broad measure of the stock market, broader than the S&P 500 or certainly the Qs. And you can see that after making a new correction low here last week, it reversed to turn higher on nice volume. This is the NYSE stocks only AD line. It had dropped below its moving average during this correction, hit support, and now closed back above its moving average. Of course, another strong week on the upside will confirm this, but frequently when you see this pattern, you do not see another reversal to the downside. This is the NYSE stocks. This is the NYSE all rather, and it also has flipped back to positive. Looking what happened on the daily charts, you can see we had a nice push to the upside from the lows on Monday, and closed now back above both the 50-day and the 20-day EMA. The S&P 500 daily AD lines moved above its moving average. Typically, we would see a pause here or a pullback, which would be a wonderful buying opportunity. Same thing for the stocks only, above its moving average. Its moving average is starting to turn up, as is the case of the NYSE, which has also turned positive. Similar positive action is noted in the weekly chart of the Qs. You can see it had a nice higher close, 2.9% up. Again, tested the 20-week EMA here and held well above the yearly pivot, which is at 483.29. The AD line also bounced from its moving average support, looks ready to challenge the all-time highs here in December, and that would be further confirmation of new highs in prices. The relative performance, that's whether the Qs are outperforming the S&P. It had flipped around after the election and has stayed positive with no signs there it is topping out. Similar positive picture from the daily analysis of the Qs. You can see we hit the support. Remember, a past high is often, when overcome, like the July high here was overcome, first in early November. That provides a strong level of support. it was tested in the past week and a half before it turned higher. The NASDAQ 100 AD line has broken its downtrend, moved well above its moving average, also has reached this long-term support line, and the daily RS also is back above its moving average. If we look at the volume, pretty good all 5 days of last week. The SPX, the SP 500, had more advancing than declining stocks with 35.6% on Friday. Also true for the 1500, and for the NASDAQ 100, 62% on Friday. I think it was over 74 or so on Wednesdays. Volatility contracted last week. The VIX has closed back below its moving average here, and the moving average is declining slightly. More of a same sort of picture here with the volatility on the NASDAQ 100, the VXN. Now, both of these do appear to be in new downtrends. Okay, declining volatility is typically bullish for stocks, and now these measures would have to move above their previous peaks to turn it back to negative. Not much in the put-call ratios. You can see thought we'd see a little more put buying the end of last week, but I guess not. 0.69, so a lot more calls being bought than puts. Same on the indexes, 0.91. The volatility has been a slight positive in the past couple of weeks, as had the high-low analysis. You can see we had a sharp surge in the number of new lows in December, made a higher high in the new lows on the NYSE in January, and have now pulled back sharply. So 12 new lows on Friday, 96 new highs. So that seems to have switched around here. We'd like to see a further expansion, say, move back above 200 new highs, but this is what you wanted to see. Typically, if we were going to see another push to the downside, we would have seen an expansion in the number of new lows like we did in September of 23. As NASDAQ Composite, same sort of picture here. 80 new lows on the NASDAQ Composite, 100 new highs. So also suggests the worst of the selling is over. There were some dramatic changes in the sector analysis watch list as well as the ETF report. 54.2% of the ETFs closed the week above their quarterly pivots. Remember last week that was only at 27.5. And we talked about the lowest reading prior to that was near a low in 2023, which is down in the 17 area. New positive weekly in XOP, SOXL, PSCE, that's a small cap energy ETF, junk bonds, healthcare, more energy. Financials had a good week, and also there were 2 new weekly sell signals for Apple and XRT, the retail, which is interesting. On the growth side, pretty big swing to positive, 50%, 100% have new, daily signals with 50% weekly. Value had a big change. 90.9% were above their quarter pivots, only 18.2 last week. And the leveraged ETF, both long and shorts, are certainly favored the long after last week's action. This chart here shows you that this is the SPXL, the triple leveraged long, and had a nice sell signal here, and it was stopped out on Wednesday. Has not flipped back into the buy mode, but you can see this new pivot for the week is at 174.71. That's an area I'd be looking at. So here's the notes, the big switches. That both XLB and XLI 50 from 0, 66.7 from 8.3. XLF, which technically it was looking a little weaker, but we just kept stuck with our stops. Turned out that was the right call. went from 27.3 to 72.7. XLK still pretty low, as is XLC, and XLU had a major move from 0 to 75%. 3 ETFs were up more than 6% last week: XLE, XLF, and XLB. And the rest of these, there are 3 more that gained more than 4%. S&P and Qs were both up 2.9%, so that's sort of the benchmark level to watch. Still a number of weekly negatives: DTS, XLI, XLB, XLU, SPY, as well as the NYSE Composite. It turned positive on a 3-day, but not yet the weekly. If you look down here further, same thing for the Qs. It's a positive quarterly, negative weekly, negative 3-day TS, and then positive on a daily basis. So, of course, some of the markets we're watching: SMH had a nice run. It's gave a new daily buy on Friday, and we're established a long position here and added to it on the last pullback. It may get a confirmed breakout, which could get it significantly higher. These are the candle glance charts of our ETF holdings. You can see that VTI, that's the global Vanguard Total World, has had a nice rebound. Cloud has also. IWF holding its own, as does SMH, one we just talked about. GLD, the drop last Monday was a great entry point on the long side, and we'll be looking at adding to those positions if we get a pullback in the week ahead. Some of the most interesting RS signals were for XLB. It's been pretty much negative. This only goes back to October. But you can see this, once again, when the fast line is below the slow, the blue, it's the time you don't want to be in that ETF because it's going to be weaker than the S&P. That's finally turned around for XLB, also for XLI, and the financials have been kind of treading water here since just after the election, but had a nice pop last week, which is consistent with we would expect the RS here to make another new high in the first quarter of 2025. Taking a closer look at the material sector, you can see Sherwin-Williams and ECL both gave 1-hour negative signals on Friday, but generally are positive based with DTS. So we're looking for these to flip to a 3-day, on a pullback. That looking more likely here. Newmont Gold, just flashed a weekly DTS. So we'll be looking again at the mining stocks too. XLI Industrials, lots of 3: Caterpillar, Deere, ADP, UPS, and United Pacific Railroad. All nice new greens here, plus weekly, and they closed above the quarterly pivot. So looking for a pullback there towards, the mid-range from last week. Consumer discretionary, still low at 25%. So that's sort of a mystery. We have Home Depot and Lowe's, both gave 3-day DTSs, but surprisingly, some of the other discretionary stocks haven't. Tesla's still a negative 3 DTS, and Amazon, of course, is green across the board, so it's leading the way. Healthcare at 50%. So, technically, you can see that the RS here is pulled back. So we'll probably be looking for an entry next week, because if we see a positive close, in the RS, it'll set up a bottom formation, and healthcare could finally be a winner in 2025. Talked about the financials. They look good. Technology doesn't. So a rebound in technology. They have their earnings out soon. That'll be interesting. Probably in communications, also not acting too well here. So we'll be adjusting our stops. And the utilities, we just got clipped out of our long position on that last drop, and but it does look like seems some positive. You can see a bunch of positive numbers here, as that short-term top in Treasury notes did occur as expected. You can see this chart of the 10-year yield. We had the divergence here in the histogram, and we got a doji sell signal on Wednesday. Now we're back down to the lower Stark band, so certainly could see a pop back up in yields, maybe up to 4.688, but still would expect, we better support there at 4.508, but the MACDs have a fair amount to decline, so they've just clipped over. So I look for a couple of day bounce and then another push to the downside. We figure out how low yields might go. Well, that's pretty much all I have for today. Viper ETF, I'll put up some new reports as well as recent videos. And of course, if you want to subscribe to either the ETF report or the Viper Hot Stocks, the Viper report is the place to go. And also, if you want a free copy of either publication, just email me at tom@viperreport.com. Thank you very much.